Investors and traders, welcome to the channel Market Chart Pattern. Today is 10th of February 2024. I hope everyone is having a great weekend. In this video segment, we are going to take a look at the key US financial stocks and ETFs. We'll start by taking a look at the regional banking index. Then we'll take a look at XLF, and then we'll follow up with some of the key financial stocks. As always, this video is for educational purposes only and it's not financial advice. It's really important to look at the financial stocks and the financial sectors in the United States because the financial sector is really important for the economy. And whenever we have seen some sort of issues come in this sector, some sort of structural issues, we have seen the markets getting impacted. So, for example, during the great financial crisis, it was the banking system which was really on its needs, to be honest, how to put it. And that's why we saw a big bear market come in. And of course, there's always going to be something with regards to the credit, the debt system, which the banks are really they're efficient in order to disperse the credit into the system. And if there is too much of it built in a not a regulated manner, then that will also cause bubbles, and that could also cause issues. And in the great financial crisis, people who might remember, it was a subprime mortgage, which is also a debt instrument issued by some really big banks and institutions, which was really where a tipping point where the issue started. So it's really important if we see financial stocks improving, that's actually going to have a really good impact on the overall markets because it means the banking system is functioning effectively, and in the marketplace, so really intelligent people and really well informed institutions and people come and play in the markets. And if there is going to be some sort of a weakness coming into these stocks, this means some people who are very knowledgeable, they might actually know more, and the prices might begin to reflect that. Just to give you that as an example, so what we are looking at is the weekly chart of the KRE small regional banking index. And if you look at some of the key US stock indices, some of them actually topped around January of 2022. Nasdaq was a little bit of an exception, which topped a little bit earlier in November of 2021, I believe. And if we look at this index, this is where it began its decline. So what it was telling us was the regional banks, which are smaller banks with smaller balance sheets, but they really finance smaller companies as well. There was something out there, and then of course it became more evident around this time in March of 2023, when the Silicon Valley Bank went belly up and had to be rescued, in a sense that the Federal Reserve came out. They used a facility which provided, I believe, $300 billion or more in liquidity in the system, which are basically improve the financial system again. And that really was where a lot of liquidity coming into the system also helped other asset classes as well. And later on in the year, we saw an extension of the rally taking place in the risky assets such as stocks, really starting from end of October 2023. So that's why it's really important to take a look at the financial stocks. With that, let's take a look at that. When we covered this index last time, we were watching for this ABCD pattern formation. Price was right at the 38.2% Fibonacci retracement, and also the ABCD price pattern, and we were expecting for a pullback, and the pullback has taken place over a course of quite a few weeks, so it's almost 2 months now. And what the price has done is it has pulled back right into its 20-week moving average, and also retraced 50% of the CD leg. Now, the last week, the lower prices were rejected. In fact, the buyers stepped in around this level, and we closed the week pretty much unchanged. but there was a lot of battle going on throughout the week between the bulls and the bears, and I think they just kind of agreed on a price which the bulls and the bears believe to be the fair price. Now, if this next week, which is the following week, starting from next Monday, if that week we close higher with a bullish candle, that will be pretty positive for this index. And what it could mean is that we might be starting another leg and another one-to-one price projection or ABCD pattern formation right here, which could then in fact see the price go and tackle the 61.8% Fibonacci retracement around the $62 per share level. So this is what we are watching. There is still a possibility that if we close below that, there are certain support levels below, but the way the price acted by rejecting lower prices, we need to see confirmation by as a positive sign. Now let's move on to XLF. So this is the weekly chart of XLF, which is Spider Select Sector Fund for Financials, and here again, when we did our analysis last time, we were watching for this 38 $39 per share level, $40 roughly, because we had the 78.6% Fibonacci retracement and also the 1.272 expansion of this entire range. Let me be a little bit more clear, of this BC swing coming right here. And whenever we have a confluence of two or more ratios or patterns coming together, it's a point that we really like to pay close attention to. So the market has just gone sideways over the course of the last couple of weeks, and the last week was an inside week when compared to the week of 29th of January 2024. So really just watching this, it doesn't mean that the price cannot move higher from here. It sure can, and if we have a week, ideally couple of weeks, but even 1 week closing above these levels, that's going to be a very positive sign for the market. The market is actually strong. Look at the momentum. The 20-week moving average is way above the 20 to 100-week moving average. So if it's going to be, it's just going to be a pullback. The price might actually come down, test these it's a breakout region right at the structural support, but looking at the momentum, the chances are we might actually, if we are able to clear these highs of 39.46, this bar higher, we are going to go and tackle these highs around 41, and then of course we'll have the higher targets as well, but this is, we'll take one step at a time, and this is what we're watching for now for these financials. With that, let's take a look at the Goldman Sachs. This is the weekly chart of Goldman Sachs. The Goldman Sachs chart is just sideways, and the key reason is symmetry in the market. So it's just actually Goldman stock has been moving in a trading range. It's just been a pretty large trading range, and I'm not surprised if the stock has gone sideways. If you look on the left hand side, here we have this structural resistance. So either this stock is building up energy to break out of it, and I'm just going to point out and see if we have also, I believe we might have this 78.6% retracement. Yeah, so also we have this 78. Yeah, so if it is able to break above that from here, then of course the next target 425 is the on the, I believe these were the all-time highs reached by the stock, and maybe it could move beyond that. But if it doesn't, then it could pull back right into 350. That's 38.2% Fibonacci retracement. And also we have this 20-week moving average. One of the things about training ranges is that the breakouts, when they happen, quite a lot of them actually fail, and the price moves back into the trading range. It could retrace up to even 50% of the trading range, and then slowly begins to form more energy, and then a consecutive breakout could actually be a persistent breakout to the upside, for example. So we really need to watch this one carefully. It's just been sideways trading action for a number of weeks, a few months now, in fact. With that, let's take a look at JP Morgan. This is the weekly chart of JP Morgan, and JP Morgan is really strong. Whenever I look at this chart, I always look at this really long trading trend line, which is just intact, and this stock just keeps on um, outperforming. So really well done to Jimmy Dimon whenever he took over. I believe he became the CEO in 2006, um, after a merger with Bank One. He's done fantastic job leading the bank, so that gets reflected in the stock price, where investors are placing a lot of faith into this stock, in my opinion. So there we go. It's just 180, making new all time highs, just gradually moving higher. There is a fair amount of strength in here. If there is a pullback, the pullback might. Yeah, this is 38.2% Fibonacci retracement. Not sure if there is going to be an imminent pullback, but if it does, it could pull back by about $20, for example, right into the structural support right here. But yeah, this is the ABCD pattern that we were looking at, but this price is stronger, number of weeks now. So that's just a pattern to watch, but looks like we might see some more strength to come in the stock. And then let's take a look at Bank of America. So this is the weekly chart of Bank of America. Here we go. And I had done a video on really long-term cycles in the Bank of America. Let's try to find that on my channel. I'll try to also put a link to it in the video towards the end of the video. And it's really, that video was really done from an educational perspective, just to show that these ABCDs one-to-one price projections that we look at, and how they actually are really cycles working in a security. That could be a commodity, that could be a stock such as the Bank of America. And we really highlighted key levels. And in shorter term, one of the levels that we were watching for was this 38.2% retracement right here. This is where we have seen the stock go sideways, which is absolutely fine, because since it found this bottom from this three drives to a bottom pattern, we were watching for this 38.2% retracement. It could have a nice pullback right into perhaps this $30 region, 30 and a half, which is 61.8%, excuse me, 38.2% Fibonacci retracement of this swing. And we have the 20-week moving averages hovering around there. And it really needs to get above this 34.50 level, which is 38.2% retracement, to start its next leg higher. And then, of course, these highs around the 38.27. Let me actually make a point of that around here. This could be the next region to watch, and then it could in fact be starting the next leg higher, where we could have another A, B, C, D to the upside, because of pretty strong support. And it's 30. This 3 drives to bottom pattern coming in right at the 78.6% Fibonacci retracement. So one of my favorite stocks to look at in the financial sector, which is the Bank of America. Then let's take a look at Citigroup. So this is the weekly chart of the Citigroup, and it's not a good looking chart when we compare it to some of its peers, such as JPMorgan, Bank of America. The price is right at the 38.2% Fibonacci retracement. Other, let's just Goldman Sachs, JP Morgan, they made new all-time highs after 2020 bottom, the COVID bottom. This stock did not. It's a double bottom here, another double bottom here. So yeah, they are doing some shake up in this organization, in terms of you can just Google about it. Um, at all levels, I believe, in terms of the workforce. But yeah, we have seen some price action improving, but also we can say that pretty much from the end of October, the other financial stocks have also improved a lot. This one not by so much. So this is really a test. Maybe it just goes sideways around this level for quite a while. Maybe even pulls back into this range again, right to this 20-week moving average, but the price action is right in front of you. What can I say more? Okay, let's take a look at Wells Fargo now. Okay, so this is the weekly chart of Wells Fargo. Again, it's testing the 61.8% Fibonacci retracement. Um, Not really sure whether there is a possibility of a head and shoulder pattern around here, because we do have this here. The way I like to take a look at the head and shoulders pattern is to really watch for symmetry in there, that I really want to have the left shoulder head and the right shoulder and the head a nice amount of symmetry there, which we might get actually, because getting near to that from a time perspective. And if the price begins to just fail around here, maybe it could be a um, head and shoulder pattern in development. But the good thing is that this stock has rallied a fair amount from its lows back in November of 2020, but it really needs to clear this zone around 61.8% Fibonacci retracement around 49, another one around 50-50. So really watching this one, Wells Fargo, because the thing is that just like Citigroup, this stock did not make a new all-time high, so it's not like JP Morgan, it's not like Goldman Sachs. So this is why we need to look at this stock in a different way. These are the 2018 highs, and this high of February 2022 is below this high, so we don't have the pattern of higher highs. So this is something which we need to watch for. Okay, let's take a look at the Morgan Stanley. So this is the weekly chart of Morgan Stanley, and here fair amount of resistance is 94, which is the 78.6% Fibonacci retracement. And with this, one of the things is that we have this where I have drawn this brown line. This is like a gap, which has been open for. It's an open gap. So if the price is not able to find support right here, which is 20-week moving average, and then we have 200-week moving average just below that, then the chances actually increase for this to actually make this ABCD right to this around $65 to fill this gap in. But it's just gone sideways. We have this gap here from its, I believe, from its earnings or something. So it's just gone sideways. If it is able to go above this 94 levels, just 78.6% retracement, and the structural higher resistance coming right from here, then the chances becomes going to go and tackle the $100 region. So this is what we are watching in the Morgan Stanley. I believe I've covered pretty much all the major US banks that we take a look at. So I think that's all. So thank you very much for watching the video. I hope everyone will have a great weekend. And if there is some stock, a banking stock, financial stock you want to take a look at, then please post it in the comments. And with that, I'll take a leave and wish you good luck and good trading. And if you like this video, how we look at the stocks and do our technical analysis using pattern recognition, Fibonacci ratios, retracement, expansions, projections, please do think about subscribing to the channel and also hit that like button if you like the video. Thank you very much. Good luck and good trading, and have a great weekend.